For those of you guys who trade euro pairs, pay attention to this video because something's coming tomorrow that could really shake euro currency cross prices. We have the ECB press conference, and they're going to be talking about monetary policy at 8:15 a.m. US Eastern tomorrow. We also have the ECB press conference, and this is a big deal because we are expecting for the first time in a very long time, since 2016, you guys, an interest rate hike from the central bank in Europe. Now, this comes in a situation in which inflation is very, very high. And when we talk about inflation, what central banks will usually do in terms of a quick little fundamental analysis breakdown here for you, when inflation is high, a way to decrease inflation is through raising rates, okay? Now, interest rates are the idea, basically, it's the federal funds rate in the US, in the European Central Bank. All central banks have the ability to raise and lower interest rates. Now, raising rates is a way to combat inflation. But here is why I personally think that with the euro news coming out tomorrow and the first expected rate hike in several years expected, I'm still bearish on the euro currency. Let's take a look at some crosses and I'll give you guys a little bit of an idea why. If you're looking to get funded, let me tell you about Audacity Capital. They just launched a brand new program. It's a challenge program. It's a two-part program with some really cool new features that most prop firms are not doing out there right now. Let me tell you about it. This two-step evaluation is done on a demo account in order to gain access to a live account should you prove yourself worthy as a trader. And the cool thing here is that you actually get access to a lot of different cool perks, such as being able to trade Forex, indices, and commodities. They have a no lot size limit, and there is a leverage of 1 to 100, giving you a lot more room. Speaking of a lot more room, the max drawdown in this portfolio can be up to 15%, with a max drawdown on a daily scale of 7.5%. This is far more generous than most of the programs that are actively out there right now, and to me gives traders a lot more room to trade within reason with that 15% drawdown in their examination phase. To join the challenge, traders must purchase a demo account, which has a one-time refundable fee, and as long as you pass without breaking any of the rules, you get your refund back, which is awesome. Once traders complete the challenge, they will manage a live account of the size that they choose, or alternatively, they can choose to join the funded trader program, starting with the account size that they selected for the challenge, having access to the scaling plan that doubles the account every time a trader reaches the 10% profit target. Audacity Capital has been in the game since 2012, funding traders. Use the link down below in the description if you're interested in checking out their programs, and use that link. You can check it out for yourself, see if it's a worthwhile fit for you. We'll start with the big one, and we're talking about EURUSD, which if you look at my chart here, I'm logged into my broker. These are not indicators, by the way. These are actually trades that I have taken on the euro dollar. You can see I've been really busy on the euro currency cross with the dollar the last several months. I've taken a lot of trades and I've made good money shorting this currency pair. Now, the reason I tell you that is because when we look at the daily chart, this thing has been really bearish, and for good reason. In recent times, we have seen inflation numbers rise dramatically, not just in the US, not just in Europe, but worldwide. And in reaction to that, central banks have been raising rates to try and combat that. But between euro versus the US dollar, which is exactly what this currency cross is reflecting, we have to ask ourselves, who has been performing better? Who has been reacting better to the situation? And the truth is, in my opinion, and in the market's opinion, since the euro dollar is going down, the dollar has been the winner. They've raised rates up to, I believe we are currently sitting at 1.75%. Whereas Europe is still sitting at 0%. And even if they transition tomorrow to a 0.25% interest rate, is that going to be enough? We have similar inflation. It's about 9% inflation in both places, Europe and the US. Despite this though, the US has a higher interest rate to try and combat that, and that is why the US dollar has been more attractive recently. Not only this, you guys, we have a big one to talk about here on this other side, energy. Okay, the energy crisis is worldwide right now, considering, the whole Russia-Ukraine situation and the overall supply line deficit problems that we've had from COVID-19. Putting all of that into perspective, though, Europe has had it worse because, again, they have a massive supply line coming from Russia, and with that being compromised, it's made everything worse for the euro area, and specifically, of course, in what we're talking about here, the European currency, the euro. So with all that said, to me, until further notice, even if they do get that precious first rate hike move in the ECB tomorrow, and even if it comes out truthfully at 0.50%, right? If they raise by 50 basis points, which is possible, but less likely than 25 basis points or 0.25%, even if that were to happen, you guys, the euro to me is still not as attractive as the dollar. And again, people are wondering, we've talked about this in a recent video of mine. People ask, why is the dollar so strong if the dollar is weakening in its buying power? Remember that it's not just the dollar that is weakening, it is the other ones. And if we take two things that are weakening, the next question is, which one is weaker? And in my opinion, it's the euro. So if I was to bet, which I am a trader, so I am betting, but I'm betting appropriately, I'm betting small, and I'm managing risk and all that sort of good stuff, I would bet more so on the US dollar. And despite the possibility of a pop tomorrow or some sort of short-term rally, to me, the euro dollar is actually a sell at a resistance point like 1.045, 1.043. So if we get a little bit of a run up, to me, this is just a longer term pullback before a potential continuation of this trend. Now, if something drastic changes, we'll have to readjust. But for me, until further notice, I've showed you guys, I've been short on this pair many times in previous months leading up to this. I'm looking for an opportunity to continue to do that, and until further notice, that is what I will do based on the fundamentals, as well as the technicals. Many traders, when you come on YouTube, what you're gonna see is you're gonna be seeing people who are talking purely technical patterns, and that's fine, but technicals to me miss some of the key components as to why trends are actually forming in the currency world. So for example, another currency pair that we could look at is EURCAD. To me, EURCAD is absolutely one that I'd be interested in shorting, especially with a supply issue in oil. The Canadian dollar could benefit quite substantially from that and has actually done pretty well, especially against the euro recently in that environment. So if we get a pop to the upside here on some of the euro crosses, I will be looking for opportunities to short. A shorter time frame opportunity could be looking for some rejection around 1.3280, which is the EURCAD marked at this level. So maybe we see something like that come into tomorrow if we get a little pop on the euro. Again, my opinion is that any pops I can look at for potential sell setups on these currency crosses. Now, again, we could do the same concept. We could go through that process of looking at euro versus CAD, right? So we can make, not CAD, it's not calorie, euro versus the Canadian dollar. We could say, well, this one has an even higher interest rate at I believe it's 2.5 or 2.25. It's one or the other. I can't remember right off the top of my head. Even if this goes to 0.25, look at the difference in interest rate. This is very attractive one way or the other. And let me show you a tool that we have designed to find and detect that exact concept. If we go take a look, for example, at EURUSD, if I can find it on this list, here's EURUSD. Looking specifically at what we're talking about, interest rates and the refinancing rate and that sort of thing, we're going to be looking out to see which currency is actually more attractive. And what we do here with the Edge Finder is we actually compare all of these different metrics, GDP, inflation, unemployment, and interest rate. If you have an interest in trading based on fundamentals with your technical analysis, this tool is built for you, because what it's going to do is basically allow you to see upcoming news. It's going to allow you to get an idea of all the different metrics scanned automatically by the indicator, by the software here for your convenience. So when we take a look at this, here's what I want to show you. The interest rate divergence here from the Eurozone compared to the US is huge, 1.75% in fact. And we could repeat the process. We can go take a look at EURCAD, if I can find it, EURCAD here. And we can see that the interest rate divergence here is even bigger, 2.5% bias towards the Canadian dollar. That's telling us that when we look at the interest rate section here, euro, even with a raise in interest rates, is still going to have a big spread bias towards buying the CAD, buying the dollar, and buying some other crosses. Conversely, look, inflation in Canada and in Europe is around the same right now. So we're seeing similar inflation with very different interest rates, and that's why we've been trending very well in the euros. And again, most people are going to look at just purely technicals, and that's fine. But to me, I have to be able to look at what's really driving the currency market in order to make an informed decision, which is heavily impacted by interest rates, inflation, GDP, and unemployment. Things like this and central bank monetary policy are the driving force behind where the currency market is actually going. Let's take a look at one more here. We've looked at euro dollar, we've looked at EURCAD, and let's see if there's anything else on this score chart summary that we can look at. Let's actually sort by score here. So we have EURCAD, we have Euro New Zealand. Let's look at EURNZD and EURAUD for a quick second, see what's going on here. So EURAUD, if we know, this one has been very weak. The Aussie has been pretty strong. Same with the Kiwi or NZD pairs. They have been pretty strong recently. So this one actually might be an interesting thing to look at on a break and retest. So if you're looking at Euro Aussie going into tomorrow's news release, watch to see if we get any sort of break underneath. This could actually be an opportunity to look for break and retests if the euro actually weakens in the post news release environment. So maybe some breaks and retests, for example, maybe an idea like this where we could look for sell setups on a retest, stops above structure, that sort of thing. And for me, I'd be looking to trail stops on this one, right? So for example, if this thing were to pop to the downside, retest, re-enter, put stops here and look to trail that stop loss behind market structure. I like that a lot with a stop loss of, what is that, 120 pips. That's a good bit of distance. You might want to tighten that if you're looking lower time frame. Maybe you're looking at the 1 hour, you can tighten it down, something like this. But again, the news release is not till tomorrow, so this gives us some time to think about the trade setups that we'd actually want to take and prepare for the news release, as it could create some nice volatility that we could take advantage of as traders. Similar concept, Euro NZD, we have an idea here at the previous low, right around here. We found pretty good support. So if we break that support, that could be the next flow to the downside. Again, bias towards the sell side on euro pairs. That's at least my opinion right now. And then, of course, if we do get a pop the other direction, you may get an opportunity to sell it at a premium up here around 1.65. So I like that idea as well, with stops above that zone as just precautionary in case we do see something change with the euro that we're not seeing just yet. But for now, again, euro bearishness is the move for me until further notice, looking for this thing to either break eventually to the downside. So I like that on a retest, and I like it on a break and retest. Either way, I could see myself picking up some euro shorts against the Kiwi, against the Aussie, CAD, and USD. So we'll see if I'm correct about this, but this is just my personal opinion. Remember, if you want access to the Edge Finder, get it for a discounted rate this week. You can get our tool. You can track all the data that's coming in from markets at a click of a few buttons. If you would like access to that, use the promo code down below in the description. You can get our market scanner for 40% off right now using code YTVIP at checkout. Thank you guys very much for tuning in to today's video. Hit the thumbs up button, subscribe, and we'll see you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.